Hello investors. Today the dilemma is whether to put in more money into equity markets or to take money off the table. I believe the right strategy is to be very focused on your capital allocation and risk allocation and accordingly book portfolio profits or put more money into the equity markets. For new investors who are in a dilemma whether to put money into markets now or to wait for correction, my humble suggestion to you is not to try to time the market but start investing. Yes, in the last 18 months, markets have run away and there have been stellar returns on the various indices. But if you look at the markets from a 5-year perspective, they have given you just average returns. The tailwind which the Indian economy is witnessing is phenomenal. From the next 3 to 5 year perspective, I believe that corporate earnings will show stellar returns. Investors who invest now can benefit from such earnings growth which corporate India is going to witness. The various reforms which the government of India has introduced, including the PLI schemes, asset monetization programs, the tailwinds which we are seeing as far as the real estate sector is concerned, and the strong banking sector, all augurs well for corporate India. Yes, valuations are rich, but it is our job as fund managers to pick up the right stocks at the right valuations, which on an aggregate basis in a portfolio should give you good returns on a long-term basis. I strongly urge you to evaluate our latest offering, Emkay Emerging Star, which invests in small cap companies. We have a very good track record and I am very confident that we should do well in the coming years. Thank you.
Indian equity markets, like most global equity markets, have been on a roll over last 18 months. From the lows of March 2020, the large cap indices are up 120% and the small and the mid cap indices are up in the range of about 160 to 200%. But this is more to do with the low base and the crash during March 2020. And therefore, on a longer term basis, over a period of last 3 years, 5 years and 8 years, even now, the large cap and the mid and the small cap indices are up in the range of about 15 to 18%. We therefore believe the recent run up in the markets is more like catching up with the mean and covering up for the underperformance in the previous years. In our latest Emkay Emerging Stars Fund Series 4, which is a small cap focused fund, we are investing in sectors like auto and auto ancillaries, BFSI, pharma and healthcare, industrials and logistics. Within the auto and auto ancillary sector, we are focusing on companies which have global presence, effectively companies which are servicing the world markets and not only the domestic markets. In the healthcare space, in the post-COVID environment, it has become even more evident that India as a country is severely underinvested in the healthcare infrastructure. We therefore believe that there is going to be tremendous amount of growth in the healthcare investments and healthcare infrastructure. In the industrial space, we believe that India as an economy is at the cusp of the revival of a capex cycle, and also the stimulus which has been there in the Western developed world is going to get channelized in the infrastructure and particularly in the renewable space. We therefore believe that even now there are decent opportunities on bottoms up basis to invest over the next 3 years.
After a stellar performance from our earlier series, we did a 3-month-long investor research survey and added many investor-friendly features and launched our Emkay Emerging Stars Fund Series 4. What's new? You can now invest with 100% corpus upfront at the current market levels, or choose to invest with 3 drawdown options of 30, 30 and 40% each. For more cautious investors who also wish to time the markets, may actually invest as low as 10% over the next 10 months period at the prevailing NAVs. This has been made possible due to an added feature of declaring NAVs and making allotments on a weekly basis. What's better? The exits have been made easier too. You may now choose to redeem part or entire portfolio through our quarterly redemption windows available post a 1-year hard lock-in. This fund will comprise of 20 to 25 small cap stocks which look promising to become tomorrow's mid or even large caps. So if you think that our AIF can be a part of your portfolio, then please visit your nearest financial advisor or write to us directly on the email given below.